Welcome to ForexTV.com. It's Thursday, March 6th. I'm Remy Hokie for New York Forex Market Buzz. In New York, afternoon trade as of 1:40 p.m. Eastern Time, euro dollar is at 1.5375. Sterling dollar is trading at 20079, while dollar yen is at 102.91. U.S. equities are in the red today, with the major indexes down over 1%. Earlier today, the ECB kept rates steady at 4%, and euro dollar hit an all-time record high of 1.5378 on the heels of hawkish comments from Trichet. The central bank also raised the Eurozone inflation forecast while cutting its growth outlook. And the Bank of England also kept rates on hold as expected at 5.25%. This afternoon, I'm joined by Michael Woolfolk from the Bank of New York Mellon. Good afternoon, Michael.
Yes, good afternoon, Remy.
Thanks for joining us on this eventful day.
And thank you again for inviting me.
Well, the U.S. dollar index has hit another record low today, and the rate announcements from the ECB and BoE are out of the way. But before we end another volatile week in FX, tomorrow is now from payrolls. So while the broader market is concerned about the financial and mortgage sector, how do recent developments affect your outlook for euro dollar?
Well, the euro dollar looks like it has further upside potential here. There has been quite a rally in the euro amid some fairly broad-based dollar weakness, following on from last week's weak U.S. data and indication that the Fed is willing to turn a blind eye, at least for the time being, to inflation risks in the country. We had today indications from both the Bank of England and the ECB that they believe that their current monetary stance is appropriate. In each instance, there are some ongoing concerns about upside risk to price stability, which has bolstered both the sterling and the euro against the dollar right now, which it appears that the dollar will continue to be sold going into non-farm payrolls tomorrow.
Okay, let's move on to dollar yen now that we've touched on the euro against the U.S. currency. Dollar yen has broken below 103 again in today's session, and the U.S. currency continues to take a hit and remain under pressure against the yen. So, Michael, what levels will you be watching for in dollar yen?
Well, below the 103 level, certainly we've come a long way without much of any resistance on behalf of the Ministry of Finance or Bank of Japan officials. We expect that we will be getting more verbal intervention in coming sessions, making progress below the 103 level very difficult. We're going to be looking at really near-term 102.50 as a kind of a objective here in the very near term in dollar yen, but we likely are not going to get any serious resistance until the 102 level.
Okay, and speaking of resistance, cable has broken above the $2 handle in today's session. If you could tell us whether you expect to see further strength for the UK currency against the US dollar, and also your expectations for euro sterling.
Well, keep in mind that cable was north of 2.10 only several months ago, and that it was only because the Bank of England joined in on a round of rate cuts with the Bank of Canada and the Fed that we saw that very precipitous fall, not only below 2.00 but to 1.95. I think that at that point that some of the softening economic data out of the UK fed into a very negative view for sterling, with some calling for 185 or even lower by the end of this year. I think that pessimism really had become overstated, particularly with respect to the U.S. dollar, which was also very weak. So we think that as we begin to price in the possibility that the Bank of England could be hiking interest rates before the end of the year, that will continue to support the currency against U.S. dollar. We see cable continuing to move higher in the very near term. Very unlikely it'll get much above 2.02. However, we see it softening against the euro still, with the cross rate, the euro sterling, continuing to trend higher towards 0.80 by the end of this year.
Okay, and last but not least, Michael, before we wrap it up for today's interview, we're seeing commodity prices pull back sharply again after oil and gold touched record highs in yesterday's session. So let's wrap it up by taking a look at the currencies of the Aussie, Kiwi, and CAD. These currencies have their own fundamental concerns, but if you could give us your forecast for the respective currencies in the near term.
Certainly, Remy. Well, yeah, certainly the dollar block is being supported by elevated oil and commodity prices. The most structurally sound economy of the three is probably Canada, with Australia a near second. I think that given the current account surplus or relative balance we see in Canada, it really stands in dramatic contrast to the very large current account deficits we see in Aussie and Kiwi land. That aside, however, it seems that the interest rate differentials really the name of the game right now. The Bank of Canada cut 50 basis points and really took the wind out of the sails of the Canadian dollar bulls. So we continue to expect dollar Canada to hover around just below parity level. It's currently trading at 98.50. We see a range next week of about 97.50 to parity. In terms of the Aussie dollar, it's come off of recent highs, down about two big figures. It's now trading at 92.90. We could see a range next week of from 192 back up to 94 cents. In terms of dollar Kiwi, we're trading just south of 80 cents. We see a range there to the downside of 78 cents back up to 80 cents next week.
Okay, Michael, thank you very much for joining us this afternoon, and thank you for your insight and analysis.
Thank you again for inviting me.
This has been your Forex Market Buzz with Michael Woolfolk from the Bank of New York Mellon. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.